Ira Epstein of Linn and Associates with your metals market update. And this is your weekend edition for Friday, the 9th of August, 2019. We're about 2:10 in the afternoon. That's p.m. Central Daylight Time, which to me means we've already seen the settlement price. And I know that gold was actually a little lower than this. Silver settled closer to $16.93, and the other markets are pretty close to where they're at. I don't know where the stock market will settle at this point. You know, in that last hour of trading, you get a lot of action, but it doesn't matter when we already know where the metals are, because that gives us an idea as to what's going on. Now, keep in the back of your mind a couple of things. First thing, on this edition, the one thing that I do is I do longer term charts. I go to the monthly chart first in the gold, then all the other charts are going to be weekly charts because I want the bigger picture, and during Monday through Thursday I do the daily charts. The other thing is I put up yesterday my silver report. So if you go to our website at www.iraepstein.com under education, you'll see Ira's metal report. Click on it, you can see it, and it's a long report. I cover in that report in silver, by the way, for you in detail. I give you an idea of different economic events that can make silver go one way or the other, the different stages, as Bloomberg was talking about yesterday. But then I take you in the price counts, monthly charts, quarterly charts, something I rarely do, then bring you into the weekly and the daily charts. So a lot of info there. All right, so let's talk about what's going on. Bonds and notes pretty flat today, a little bit more yield coming in them. The dollar down a fraction, and you've got a mixed bag with the British pound, the weakest of the currencies, because they don't seem to be able to even get an idea as to what's going on. In September, Parliament returns there, so that'll have an impact on the market. And I mention this because as world events get worse and worse, gold gets a bit into it. So something to think about. Let's take a look first at a monthly bar chart. We've had a breakout in gold on a monthly chart. It actually occurred right here. And instead of the market getting thrown back like it's done in the past, back into this, if you will, into this sideways action that it had, it followed through last week, and for all purposes, $71 gain this week. So the market has proven that it's in a breakout mode. On pullbacks, I wouldn't be surprised if the market, if it found support, if it can get there, and I doubt it's going to immediately, back to the 100-month moving average at 1350. Being a monthly chart, getting to these numbers is not easy. It's a lot easier when you start going to the weekly charts. And this is an area chart of just closing prices because it gives you an idea of the action on a week-to-week basis. And I don't think you're going to argue this market is up over $200 just from May per ounce, 20% gain. Gold's been on a tear. As we look at how the chart action is of the weekly chart, on a bar chart, you can see what it's done. As I said, a huge week right now, up 51 bucks for the week. The trend is up with the pattern, and we've had this. Higher lows, higher highs through here, and it began when the market broke out from right in this area. Now, in terms of the moving average, once it got over the 18-week moving average in red, and that's what this is, it just didn't look back. It ran to the upside, cleared this high, and it's like you put in high-octane gas into prices. It took off. Of course, we know in part what it is. We know it's the renminbi, which is the yuan, of course. We know that it's what's going on in Europe with the slowdown. I can go on and on. You know all the events, and gold is reacting to them, including further negative interest rates, the U.S. rate cuts, all this taking place there. We are over the upper Bollinger Band. And when you get over it, especially after your first leg over it, it would take another major event of some type to keep it over it and just keep running to the upside. I'm not saying it can't happen. I'm giving you the norms. So I wouldn't be surprised if you pull back a little bit and then the market keeps its resumption, because 95% of the time the market will trade underneath a Bollinger Band or over the bottom one. Got it? It will trade within them 95% of the time. In terms of momentum, it's clearly to the upside. In terms of bias, whenever you're over the 18-week average, I say bias is up. Under it, the bias is down. That's my line in the sand, the trend up. So until you would take out 1,490, which would break the pattern of higher lows, higher highs as it exists now, this market's very much in an uptrend. As we step over now, and the charts will come in right in a second here, or they should, there we go. GLD, it's the same thing. Once you cleared that 18-week average, you got over that thrust of the Bollinger Band, and it would have been the same thing if you went on the monthly charts. You probably see similar action that I showed here. Pulled back, and they're mirroring each other. The market right now looks, of course, I don't know what the settlement is here because it's still open. Current price is 141.10, about 40 cents or so over the upper Bollinger Band. I wouldn't be surprised if it pulls back, fights its battle, and then continues to grind. GDX on the longer term chart looks better than it does on the dailies. It's got and has kept its upper trend. It keeps riding the Bollinger Band, throwing itself back, just what bull markets often do. Got momentum locked into the upside as well. It hasn't turned down and bias up. When I come over to the gold-silver ratio, what you did is you had come down, went back up on a correction, and now fading back just a little bit on the weekly charts, which says silver's gaining a little strength on the gold. Typically in bull markets in metals, silver's a big-time performer. And in the silver market, you've had one of these wild weeks in it. You've got a range 1725 to 1613. That's a big range, my friends. As it's turning out, the market's up for the week, so we've got a bullish week. The market could at any point pull back into those under the Bollinger Band, but momentum is up, trend is up. You got higher lows, higher highs. I think you're a little ahead of yourself, but that doesn't mean anything. This Bollinger Band's going to climb next week. It's been climbing right now, if you take a look at it, about 25, 30 cents at a shot. Is it going to be able to keep doing that? It's going to be the question. But I would expect price is going to try to get under that number next week. We'll see if I'm right. In the copper, by the way, it's a combination of the Bollinger Band going up. The price can just stall and it can do that. In the copper, the bigger picture to me is still bearish, and that is because China keeps contracting. Now, admittedly, this week their export business picked up July over July, but it really didn't have much of an impact on copper overall. Yes, copper's up 2 1/3 cents for the week. Okay. But it didn't change the overall chart pattern, which stepped out of a downtrend. You can see it had a rally back to what I call that line in the sand, that 18-week average, and the market then failed again. Momentum is flat right here. The market's not trending, but the bias is down. If it continues down, you might be going for that lower Bollinger Band again. In the platinum market, the trend is up. You have higher lows, higher highs. The market made a run. In fact, for 3 weeks, it's tried and been fighting at what number? The 100-week average of closes. If you cleared this high, then I'd argue wherever that Bollinger Band comes in could be the next resistance, but it's stalled here for whatever reason. Support's back at 842.5, about $20 lower. Momentum up, bias up, trend up. The market that's the ugly one has been the palladium. You see it on the daily charts when we do this during the week, and you're seeing it here. You've actually had a market that's got lower highs, lower lows. You had an outside week down last week where the market finished out at $13.99. This week you're up a little, about $20, but you're still under the 18-week average. So I'm going to define the trend is down, the bias is down, momentum is measured by the slow stochastic still pointing down. And in the dollar, I'm going to repeat what I say. Often, not always, the first challenge of a Bollinger Band is where pros take some money off the table. Now, does it have to just stop there? Well, we've seen in other metals it doesn't. But it's been doing that in the dollar index. The question for the dollar is what next? But the fact that the dollar slipped back this week gave a boost to the metal markets. It's still in an overall uptrend unless you take out 96.32. I cover on a daily basis starting early in the morning. When I tell you early, I think I began recording today around 5:30. The morning subscriber video. Now let me explain the difference. First of all, you can get any subscription to my research includes our handheld application that you use in your Android or your Apple phone. So it'll work in all of those. And my videos will play in them, plus my subscriber information and my written updates if you're a subscriber to that. So you get everything, and the neat part is, instead of a text message, if you have it, I do a push notification. and you get a message right there on your phone. It falls as one of those message notifications. Just click it. Everything opens automatically and you're viewing what you need. What I'm able to do is I'm able to give you entry and exit objectives in the morning. Very specific. Buy here, sell there. I'm wrong here. I'm right here. Here's a profit objective. You're going to see me right. You're going to see me wrong. But the one thing I like is the idea of money management and swing trading. And why do I like swing trading? Because when you use futures, you've got phenomenal leverage, 80–90% leverage. You know, the stock market, if you're a margin account's 50. So using that, you get these moves in the market. Now, the difference of the chart action, too, that I do there is I have more studies. The charts will look just like this. I'm going to cover in this exact order each time these charts. So let's assume you're interested in the energy market. You don't want to know the rest. You just take the slide bar and pull on it. It's going to light up and name stock indices, currencies as you do it. There's also a lexicon on this side so you can get there. Let's assume you want to watch everything. Just let it play. Let's assume you want to go back somewhere. Do so. I make it easy for you. And the idea there is I don't want you wasting your time. I want you to get what you want. But the real purpose of this is trying to give you, if you have your own trade idea already, confidence or reasons to do it. Maybe I'm seeing something than you are. You decide what you want to do. That's the idea there. And because I do this so early, it means it's coming out before U.S. reports. You have it in your hand and away you go. I was on vacation. I still did these for my subscribers each day. Admittedly, later because I was on the West Coast. But normally in Chicago, I'm up early anyways and I'm reading, so away you go. There is a charge for it. 26.5 cents a day for a trial for the first 30 days. No contract with me or anything. If you want another 30, it's $15. And then I also make a 360-day subscription available for $156 paid up front. So it's about $13 every 30 days. To find out more about it, just go to our website, www.iraepstein.com. Under the words education or research, you'll see the pull-down menu. Click on Ira's Morning Subscriber video. It tells you everything, and you can sign up for it there. And you can get to it also if you click right up here. You see this icon if you're watching me on YouTube. It'll take you there. Again, one last thing. That silver report's out there. I only keep them on the website 5 business days. Then they're gone because they're very timely. You have a good day. I'm Ira Epstein.